Hi everyone, welcome back to The Technical View. Hey, thank you very much for joining me this week. It is so great to be able to chat about the markets with you. It's a little bit of fun, and this is where we look at the world markets from a technical analysis point of view. And you'll see over the last couple of months, we've made some pretty decent calls. We've had a lot of fun as well. Let's start with Australian All Ordinaries. This is the market that I personally trade, and this is how we've sort of looked over the last couple of months. First of all, this huge head and shoulders pattern typically leads to lower prices. So we've been keeping an eye on that. Now, last couple of weeks, it ducked below that. I got quite frightened, but it was false breakout basically, which is even better. I mean, that's fine by me because I only trade long, so happy days. Now, since then, what I was looking for, and I'll show you two things relating to this move. We've got the zigzag up. That's exactly what I was looking for a short-term up move, and that's where you'd get your sort of signal coming in there. This is the alternative to the move in December, which was just one single up move. Now, the reason I wait for that little zigzag is because it tells you a lot about the move. It tells you how committed that move is. If it moves all the way up like it did in December, and then on the first down leg it keeps going, then obviously that is a bad sign. So, I mean, that's the reason behind it. That's the reason why I wait for that zigzag up, and we've now got it. So happy days. Now, what we're looking at is it's actually right on that resistance as well that we were speaking about over the last couple of months. This is long-term resistance, and we're currently right at that crossroads. So this is really cool. These are good times. So we might see a bit of sideways action or a bit of consolidation around that trend line typically. And of course, that up move would be wrong if it closed back below the 4,900 level. Let's jump over to the S&P 500 in America now. And again, similar pattern. We had the head and shoulders style long term. I mean, this is a 2-year pattern, very, very big. And that's another reason why I was worried about it. Almost exactly the same thing has happened. From a chart pattern point of view, we've got what's called a double bottom, obviously two troughs at around the similar levels. And that sort of signals a good level of support at that level. Market has moved up off that level. So it did duck below the trend line, which again I was worried about. It had its false breakout, and now that level is still finding support. So this little box here, basically that's where I had the zigzag up from the S&P 500. We got that earlier than the All Ordinaries, which is great. And again, now very similar deal. This is moving upwards from that short-term entry there, or that short-term up move, and that's moving into our resistance levels that are hanging overhead. Now, so there's a couple of resistance levels, one at 2020 and one at 2100 on the S&P 500. Let's jump over to the FTSE, and surprise, surprise, very similar things happening on the FTSE as well. Same head and shoulders pattern, same breakout or false breakout to the downside, same move back up, which is, this is a good sign for me personally. Obviously, everything can change in the markets on a dime, which is great, and that's one of the reasons why we enjoy, the fluidity of this market in this game. It's fantastic. So we've had the zigzag up. I was worried about that resistance, but it's had a zigzag past that as well. So as far as I'm concerned, short-term happy days on the FTSE. Again, you'd be looking, if that was wrong, the 5,850. If it sort of traveled back below that move would be wrong as far as I'm concerned. And you might again see consolidation around these resistance lines in the future. Let's quickly look at the National Stock Exchange, India as well, and we've had the huge channel for over a year, definitely moving downwards. Now, this is the greatest thing that I have seen in quite some time on the National Stock Exchange in India. Obviously, we've had heaps and heaps of gaps down over the last year. Gaps down, gaps down, gaps down, more gaps down, 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 down. And now, in the last week, again, similar to the S&P 500, there are those two levels there, the double bottom that you might call it. Nothing too fancy, this is really very, very simple stuff. However, and again, you'll see this from probably about 5 videos ago on the S&P 500 as well. A bar like this that closes well off its lows and has a long range, you typically look for an entry at the top of that bar and your stop loss at the bottom of that bar. That happened. So this happened all in 1 week, which is great, from Monday, Tuesday, Wednesday, Thursday, Friday. And then it started to gap up. So Considering that support there, considering that long day, and considering that single bar entry on the Monday there as well, things are looking considerably better on the National Stock Exchange India. Now, because of the gap, I would count that as a short-term up move as well. I would consider that my zigzag pattern upwards. Obviously, we do have the resistance at around 7,600 and 7,900, and that's just those trend lines extended out on the Nifty 50 there. Now, last but not least is the Shanghai Composite in China, of course, and again, similar head and shoulders pattern, and this one has sort of moved down right onto its neckline. So there's the neckline there. What I was talking about over the last couple of weeks was a very, very short-term up move because of that short-term zigzag up. And the support level was around that 2,700 level. Now, so all of those things are still in play. So in other words, we've still got the short-term up move because we haven't really closed below our support level and we haven't had a zigzag down. So if I extend that out, I haven't added anything in here either. So these boxes are still from the last couple of weeks. That box, as you can see, I mean, that's exactly where the market fell to, right on that support level. And this pattern is still in play. Short-term up move, potentially turning into a continuation pattern downwards, but you know, it depends on the time frame that you're playing. If it's a medium-term time frame, you would wait for a close above this resistance level, which is just that trend line extended out, and that's at around 3,100 currently on the Shanghai Composite. So guys, I hope that's helped. I hope that's been a bit of fun. I love looking at this stuff, and thanks so much for stopping by. It is great to have you here as well. Check out my website, it's asxmarketwatch.com. A whole bunch of free videos, a whole bunch of free trading systems and trading courses as well. Really cool and a good culture there. I absolutely love it. Really good people. Have a great week ahead. Happy trading until we meet again, and bye for now.